Hey, welcome back to another Market Closing Dive. Kind of had to rebuild the office a little bit, so my mic is in a really awkward place. I forgot to move it. But anyway, we're here. So, let's see what we got going on. I think we got a lot of things going on. Specifically, Coinbase is still going mad. And Tesla's been bobbing between positive and negative. Voyager Digital is Voyager Digital up 47%. My goodness, that's a lot of hopium over here. All right, what do we got here? So Coinbase, this going crazy thing from 40% turned into only 10.5%. How wild is that? Look at that. Straight down to 10.5%. This was my concern. Like I've been rebuilding this office, so I haven't been paying attention, but this is a very, very important moment right here to pay attention to, because what you see here is pre-market momentum. And I mean a lot of pre-market momentum. I mean like one guy at an institution throwing $50 million or something like that, or maybe even hundreds of millions of dollars at Coinbase going, that's it, we're buying. And this is a little annoying. I got to fix this. But anyway, and so that sets off this, oh my gosh, well, if one person thinks this is such a good deal, then a lot of people probably think this is a really good deal. Well, that sets off some more institutional buying at the open, leads the stock to get halted. And so what happens after you get some increased volume here at the start of the day? Well, as every single time, folks, every single time, you have to remember this. So Christopher, don't feel dumb. It's a learning experience. Just don't let it happen to you again, right? Like it's fine if you make a mistake once. It's a problem if you do it again, right? But I'm telling you, when these charts are just going to the frickin' moon like crazy, it's momentum. And as soon as the volume goes down, what ends up happening? Boom. The volume literally bleeds the stock, the lack of volume, right? And that's what happened here. See, you go from 40% on this euphoria to down to 30%. You stabilize a little bit. You get a little bit of a wedge pattern here. I mean, you could actually see the wedge here. You know, if you drew sort of a little wedge like this, and then we know, okay, we're going to break out to one of the directions. And because this is, and I usually like doing this live because I personally hate the technical analysis people who are like, oh, see, this is what the chart did, and you kind of like look at it in the past. I hate that. So either way, we know it was starting to consolidate. But when you get a consolidation following massive momentum, as long as that volume trends down, eventually you're going to bleed the stock of purchasing. And people are going to slowly go, this is a nice place for me to recoup some losses, sell. So what happens? And towards the end of the day, you sort of just bleed down. So still up 10% though. So still not bad. You know, I mean, $89. Hey, it's still pretty good. So you can't be mad if you've been a hodler. It's still a good day. It's a very good day. Workhorse up 11%, and we've got Microvision. Ooh, Microvision. I remember that was a big momentum one for quite a while there. Who remembers the forward-facing LiDAR and the mirrors? I don't think they ever got into that, which was terrible because I thought it was really good technology. Solar Edge rebounding about 5% today. That's pretty good. Seeing Enphase move up as well. Even though we've got doubts now over the Energy and Inflation Reduction Act. A lot of doubts, in fact, over that act. So many so that, I would expect to see some volatility in the energy stocks over the next week, especially as we lead into inflation. I'm personally not terribly worried about this. What's it called? Jobs report tomorrow. It'll be interesting, but not so terribly worried about it. I'm more focused on that CPI model or release rather. Okay, good. So let's see. Let's take a look here to see what kind of crazy things that we have. So today we have you get a lot of suits talking about how, oh, this rally can't sustain itself. It's moving too fast. Stocks waver on Fed speak, blah, blah, blah. Excuse me. This is the same crap every single day. Fundamentally, I like that we're seeing a recovery. I definitely do think that we could see a double bottom, but I don't know. If we do see inflation actually meaningfully come down, this retracement is totally what you would expect. In fact, if inflation does trend down, I would anticipate as much as a 50 to 60% retracement, which means we still have room to get to about QQQ 350, which would be another 25 points. I think that's entirely reasonable. If we get a miss, we'll bob around based on the severity of that miss. Now, I mean, if QQQ right now we're sitting at 100%, I'd be like, this is bad. If we were back to like January 1 levels or end of December levels, bad. Even honestly, like 78%, then you start getting nervous again, because then it's like, wait, but we are in a technical recession. We are starting to see a softening in home valuations, which has a wealth effect. People are saving less money. People are taking on more debt. At some point, the earnings recession will come. So we got to pay attention to that. Callaway earnings today. Yeah, sure. We can do that. Today is really one of the last big days of earnings seasons. Can you do another stream with Richard Hart? You missed so much game he was giving you. What? He was giving out. You missed so much game he was giving out. I don't think I missed any game he was giving out, but I appreciate your $20 nonetheless. Hey, want to do the stream? Sure, I'm happy to. All right, so what else we got? Well, here's what we're going to do. We're going to hop on over and see what these folks are talking about.
Shortage on the Colorado River, which meant level 1 cuts for Arizona, Nevada, and Mexico on their water allocation.
I thought I was on CNBC, but I'm not. This is what happens when you reset up the office. Everything's a disaster. See, because the mic's in my face and stuff. Like, I gotta move this. Here, give me a second. I want to try to change the channel and make this happen. What can we do? What can we do? What can we do? I know what we'll do. We'll do something fun. There. You will have a little video, and I will fix both of these problems really quick. So mic in my face, and I need to get CNBC up. Okay, 1 sec. I will be back in about 50 seconds.
Don't be scared. Right now, I don't know if I'll ever arrive. Where the grass is green, we're still alive. I hope I'll see you on the other side. I know that I'll be paying for the ride into the black hole.
Okay, I think I fixed every problem I had. Sorry about that. All right, so we will now be able to check what the suits are talking about on CNBC, but they are on commercial right now, so we'll check them in a little bit. Mike is not in a perfect spot, but it's fine for right now. All right, so thank you for bearing with me there. Okay, so yeah, let's see here. We've got... Well, let's look at what we've got for earnings today. I'm kind of excited to see, because it's one of the last big days for earnings. So today, Square. I mean, following SoFi, Square should and PayPal, I'd be bullish on Square just based on those two. But they're going to get some hits from their crypto trading from this last quarter. AMC at 115. Someone asked for Callaway. We'll pull that one up as well. And then we have Twilio is a fun one. We'll take a look at earnings for Twilio. We have Lyft and Beyond. Ooh, Lyft. Also, same thing with Lyft. I mean, based on what Uber pulled off. Ooh, Cloudflare reports today as well. We'll pull them up. Wow, we have a lot of earnings to cover today. This is a lot. And Dior Dachet and Expedia. Oh, how fun. All right, we'll do those as well. So pull them all up. So this is, remember, Fridays we barely get earnings. So it gets Fridays are a little boring in that sense. But these are going to be fun earnings. All right, let's listen in over here for a moment.
Are impacting that business. Dow's down about 64 points. We'll be right back.
Oh, okay. You guys literally were just on commercial. It's exhausting. It's fine. No problem. No problem at all. Another thing that I like to do while I'm looking at the sticks is I like to just kind of sort by name and observe stocks that I think are still in a trading range that's like somewhat low. And it's very difficult to do that based on, how much something moved within the day. Usually it's substantially better to just sort alphabetically and then look through at kind of where things are trading, right? So, for example, you've got Airbnb at 118, still in an interesting position, not terrible position in terms of pricing here, and they did fall a chunk, but they've been recovering from that after earnings. You've got Affirm at $32. I mean, it's not like the 18 that it used to be, but still didn't go bankrupt, right? AMD at 104, not terrible. Amazon had a little bit of a run. ARK at 50, Activision Blizzard at 80. What else looks kind of lowish? I can't believe Dutch Bros has held up this well. All right. Let's see here. Beyond Meat, $31. The interesting thing about these, like the biggest question mark I have for these companies like Beyond Meat and the plant-based food companies is why did McDonald's end the partnership? Is really American Appetite just not that into the plant-based foods? We really just got to have our meat. I mean, personally, when I see the plant-based foods on the menu, I'm like, yeah, I'll take the real stuff. That's just me. I think everyone's personality is different. Some people don't eat meat though, and there are aspects of that for sustainability, for whether you're vegetarian or vegan, obviously. But if you're not vegetarian or vegan, I do wonder how the staying power of these, and I've wondered that for a long time. Cheesecake Factory at $30, but I usually don't get into restaurants personally. Carnival Cruise Lines. 7 or 9, their CEO just stepped down. And so that transition will be fascinating. We'll see if someone actually comes in and cleans house or helps them out a lot. Costco's come back nicely. I mean, Costco went down to what, $400 there for a while? Yeah, look at that. Costco's really rallied nicely here from the bottom. Very, very nice. CrowdStrike has also rallied from the bottom. Maybe not as much. Well, actually, that's a pretty decent rally. Disney coming up off of 90, sitting at 108 right now. Just even a couple days ago, was still sitting in the low 100s. Geez, I'm going to write down Disney. Disney's not terrible. eBay, Darden. I mean, Enphase just doesn't give up, which is incredible. I do think ERJ has some potential. So I'm going to write that one down. Well, our course member live stream got pushed back a little bit today because I had to rebuild this and it was a disaster. So we'll be one of the ones I want to look at in the course member live stream later would be ERJ. Even if we just do a brief look, want to look at the fundamentals a little bit because this is a foreign company. Usually I don't like investing out of the country, but if I wanted some foreign exposure, that would be one I would consider. What else do we have? What else is doing very interesting things price-wise? Let's see here. So Alphabet, Home Depot, 300. Still see a slowdown of spending to come for the household divisions. It's the second half of the year. I think you'd see more of that. Unless, of course, people just go crazy towards the end of the year trying to get some tax deductions for things like, solar or whatever. But Who knows? Okay. Then we've got Macy's. Macy's $17? Wow. Macy's really bled out over here, huh? Macy's was almost at one point like a safe haven. That's really interesting. Wow, and Piton down at $10. I wouldn't be, Piton is so low. At some point, it's almost going to be worth a look again. I'm going to look right now, really quick. We're going to do this one together because it's down like 7.5% right now, and it's falling into the close. It's still $3.5 billion though, a little expensive. What's Nordic Track? I actually just bought a Nordic Track treadmill, and let's see what are they? So ticker symbol, is it iFit? Plans are, did they end up going public? I don't know if they did, but as a comp. Oh, well, iFit's got a $6 billion market cap. Really? Oh, the IPO got withdrawn. Oh, I see. Okay, so that's that market cap is probably substantially lower now. That makes sense. Alrighty then. Interesting. So Piton, let's look at some of their financials. Peloton Investor Relations. Let me get back to some of the headlines as well. So looking at the Peloton Investor Relations, if we just hop on over to their last presser. Let's see what we got here. Events and presentations. Come on, Peloton. Peloton earnings call Q3. That's what we want. Oh, come on, folks. Financials, quarterlies. Here we go. All right. Stand by. This will be up in just a second. Bears are getting slapped before the CPI print next week. Yeah, probably. All right, so here, I mean, they're still interesting. Look at this. I do find this very interesting. Peloton is still growing users in what's essentially the second quarter of 2022. I know it says third quarter, but I can't mentally align that. So second quarter, they still grew 5% in the quarter, which is actually somewhere around 20% growth, which on an annualized basis, which is very interesting. However, I think this is a problem. What do we have here? Look at this. Net connected fitness subscription additions. Okay. So they actually still grew connected fitness additions by 7%. So that's fine. They're just adding at a substantially slower rate. That's fine. There's actually blowing up in the amount of workouts that they're doing on the platform. That's very, very good. That is an incredible quarter-over-quarter rate. Wow, that's actually not bad. Connected fitness product revenue. Yeah, so it's their subscription revenue is growing right here. This, I don't know. Did I get a crap HDMI? Or maybe it's the dongle. Anyway, so 10% subscription revenue quarter-over-quarter growth. However, the product is obviously selling not so great, right? And but the problem is they're still losing money like crazy. How do you lose $757 million? Golly, dude, $757 million. Let me look at the cash flow statement. That's insane. Cash flow statement. All right, here we go. So their net loss. Oh, this is 9 months ended. Dude, why? Why don't you show me the quarter? That's for adjusted EBITDA. That's annoying. I want cash flow. This is the income statement. This is the balance sheet. Why aren't they giving me the 3-month? I might have to go to the quarterly report. I don't really feel like doing that right now. But I'll just really quickly run through this. How did they lose $1.5 million? Goodwill impairment. These are all add backs. Inventories, growing inventories, and payables. Why are they still growing inventories like this? Don't they have enough inventories by now? Proceeds from public offering, that's fine. Peloton, yeah, no, I mean, no, these are accounts receivables. Yeah, look at these inventories. Holy smokes. There you go. Look at that year-over-year jump in inventories. I mean, that's like a 50%. This is like a 50% increase in inventories right here. That's wild. So losing money hand over fist, 50% increase in inventory. They are growing subs though, but what's that worth if you're still losing money, right? Like how much do I care if they have a ton of subscribers? If their expenses are just too high. I mean, if we look at subscriptions, this is a financial summary right here. If we look at subscription revenue, they're making about 400, let's just call it, we'll round up, okay? Making about 400 million bucks on their subscription revenue. And their margin on that is like 70%, which is great. That's very good. But then they have operating expenses of like $1 billion. Dude, how? How do you spend $1 billion on operations? That doesn't even make sense. Here we go. 3 months. Yeah, no, that doesn't make sense. Because here we've only got, oh yeah, there it is. No, 920. That's almost $1 billion. Holy crap. I mean, sales and marketing 227, G&A 242. I mean, that's just G&A is almost all their subscription revenue. R&D, this goodwill impairment and restructuring expense, those things will go away. So you'll see about 300 of that go away, but you'd still have to like 2.5x your subscription revenue just to be profitable just solely off of the subscriptions. And I don't know that the bikes are actually profitable anymore because they're kind of having to give them away. Connected fitness products. Oh my gosh, the bikes went unprofitable. No way. Look at that. Connected fitness product revenue, $594 million. Connected fitness products, $662 in expenses. Oh my gosh. They are literally losing money on every single bike they sell now. Cross that one off the list. That was easy. That didn't take a lot of fundamental analysis. I mean, then again, you could have just heard the name Piton and been like, nope. Oh, dear. All right. So what else we got? Nike, NVIDIA. I'm still tempted by NVIDIA, but I'm still expecting a couple of... When does NVIDIA report? I want to see when they're going to get hit by the inventories. NVIDIA earnings call. So NVIDIA, August 24th. Oh, come on. You're making me wait long. Would I short Peloton? I probably wouldn't because one of the issues that you have is a rising, like I've said this about other companies as well. I'm like, don't love the company enough to basically like sell Tesla and buy it. Or sell my M1 Finance and buy it, or sell some of the other positions I have and buy it. Don't love some companies enough to do that, but I look and I go, but I won't short them because even though I think fundamentally, it's not a business I want to be invested in, that doesn't mean the stock is going to go down. In fact, the stock could go up just because the rising tide lifts all ships, right? You have to look you have to play macro in 2022. It's impossible, in my opinion, to really perfectly nail the individual traits. Very, very, very difficult in this market because this is a macro market. What's really cool though about that macro thing, and I want to show this here. Eventually, this will be part of a video, but shout out to McKay. McKay found this, which was really neat. Take a look at this. He sent me this text. He said, and this is what I do. I do macro, right? Anyway, he sent me this text. He's like, Kevin, on January 23rd, you said, quote, I believe the market will go down another 20%. Here's the QQQ from January, the closing day right before that. Look at that. To the bottom, 22.8%. So macro matters. Can we perfectly pull off all the crap in between? No, it's a lot harder. It's nearly impossible to do it perfectly, but that's okay. The macro is what matters. And that's why I'm saying, like, you don't want to, like, even if you think a company is fundamentally not what you want to invest in, you don't want to short it when the macro cycle right now is up. Now, if we continue to go euphoric before CPI next week, it would make sense to have some downside protection. And, you know, before CPI, we'll talk about some downside protection in the course member streams as well. I think that there's, you know, that would be a very smart thing. But anyway. Okay, so what else? Let's hop in over here. I'm going to keep scrolling for a little bit, but let's see what's going on over here.
To be super happy with that relationship and the products he built, and the respect he has in the market. So it's very, very good.
Because he claimed, according to Complex in an Instagram direct message, that you planned Yeezy Day without him, that Adidas is ripping off some of the styles, like his slides, that there have been issues with capacity. Is any of this true?
I wouldn't go into detail to discuss those elements of it, but of course, from a supply standpoint, there has been issues as we have globally. But overall, we have an extremely good relationship with Kanye, and speak to him, very, very regularly, and we very much respect what he does. So I would say we have a very good relationship with him.
Didn't bite on that one. Casper Rorsted, obviously the Yeezy brand is key, still growing double digits. And just last week, Adidas did cut their outlook, saying they now expect mid to high single-digit top-line growth, which Adidas says reflects slower than expected growth in China. The stock, though, has underperformed Nike, the market, and Lululemon so far this year. Up next, we will discuss why Coinbase is rallying and on pace for its best week ever. That story, plus indigestion from some restaurant stocks and a countdown to Block's earnings when we take you straight inside the market zone. We'll be right back.
All right. So, well, I guess we can go back to kind of looking at some of these together. We're almost actually at the bottom of the list. I just had to send this really quickly. One sec. There we go. Okay. So, oh, one sec more. All right. So, what else do we have? So we did a quick little run through on Piton, which was disgraceful. Pinterest, Dave & Buster's. Dave & Buster's back at $40. It's okay. I like it much more 30. Pinterest makes me very nervous. Not very excited there, especially the last earnings call, how they talk about, oh, it's just big box stores that advertise with us. And it's like, okay, yeah, well, those are the ones kind of pulling back on advertising. You know. So Redfin and Open Door reports today. That's going to be really interesting. I'm excited to see how Open Door pulls off. Tom here writes, I'm in the travel industry. Yes, it's booming now, but forecasting a rough third and fourth quarter, especially with COVID spike. Be aware, Airbnb for now. Very good point. Interesting. Yeah, and that's something to keep in mind too, is like when we're traveling, we think, oh, everybody's traveling. And it's like, well, maybe we're traveling when everybody else is traveling, which is the summer, but we're going into back to school. I mean, my kids go back to school in 4 days, which is kind of crazy already. It's like, woo. Andre Yolo calls for Open. Hey, I hope it. Honestly, they could still do well because the first and second quarter, you really haven't, I don't think, realized the big declines yet that might come to real estate. Roblox is still an interesting one, but I question their path to profitability so much. I really just don't know that they can pull a profit. My kids spend money on Roblox like there's no tomorrow. But, again, a lot of that is going to the driver of the Uber, so to speak. It's going to the developer, right? Which isn't Roblox. So, I know there's a cut, but still. Solar Edge makes me a little bit more interested, especially after this decline they had But you know what? That's what we're going to do today is we're going to go through Solar Edge in the course member live, because see, Solar Edge had a big drop. You know, they came off like 370 or whatever. And there was something that really hit their bottom line. And I'm not sure if it was an impairment or exactly what it was, but their revenue was good and they boosted their guidance. The problem is Solar Edge is just like Enphase in that if the housing market slows down, maybe people spend less money on this stuff, and you do see a slowdown there as well. But then again, that has not stopped Enphase from being one of the best performing stocks here all year long. Enphase has been phenomenal. I mean, the best thing you could have done with Enphase is just held it. But oh well. Trade Desk, $50. Actually kind of surprising that Trade Desk is all the way up at $50, given that they lost Netflix. Well, they never had them, but anyway. Tesla's flat. They're doing their shareholder meeting today, by the way. So we'll see if we get that 3-to-1 split or if there's any other crazy talk from Elon. Often there is. I'm going to pull up some notes just to see if there's anything already. Let's take a listen here, though.
Unchanged, and the Dow is lower. Path of least resistance still feels higher after 9% gain in July, and sort of starting off this week with the third week in a row of gains. I don't feel like enough people mentioned the Bank of England today, which hiked rates 50 basis points, the highest they've done in like 25 years or something, and much more explicit than our central bank and others about expecting a recession to start before the end of the year. And it's the gloomy forecast weighing on the pound. Does that resonate as we're trying to figure out what the Fed is going to do and what our economy is going to do?
It doesn't really. I mean, I'm not saying it shouldn't, but it seems as if really that would get filtered in to some degree through, how the dollar trades off of it, as we're seeing right there, as opposed to really anything it tells us about our macro situation. Now, I guess we may look back in retrospect and say, hey, stocks are whistling past the graveyard. The Treasury yield curve's deeply inverted. Fed officials keep telling you that they see no easing off the tightening campaign anytime soon. On the other hand, when the market does what it seems not positioned to do, in other words, when the market goes up or stays strong in the face of potential negative catalysts, you have to pay attention to that. And I do think you see some decent rotation under the surface. Some of the big growth stocks have been providing support, even as things like banks have not traded well. So we'll see if any of that kind of comes home to roost, or if it's really just a matter of this market having gotten so oversold, people be left behind by this little bit of a rally. And maybe the macro data has been good enough to keep the bull case alive for now.
I just want to be clear about what's happening. So bonds are rallying and the yield curve is inverting further. Is the bond market pricing in a recession as the stock market prices out a recession?
I don't know that that's really the case. I think that the stock market, arguably going down 24% peak to trough, went some distance toward pricing in higher recession risk. I think, what the bond market is saying is perhaps either we do truly get a recession and it means that, the Fed doesn't have much more to go and we'll probably have to reverse, or we don't get a recession and, the Fed does its job on inflation. The longer term rates are responding to things like that. So, we haven't escaped the risk that, in fact, we'll have much more of an all-out recession as opposed to just this bumpy period. I continue to go back to the fact, though, nominal growth remains relatively strong, and companies are telling you there's still enough business out there that they don't have to radically downscale their expectations.
Well, let's hit the restaurant movers, find out what they're signaling about consumer spending, because a trio of restaurant stocks making some big moves here after earnings. Most of them lower. Restaurant Brands, which owns Burger King and Popeyes, beating Wall Street's estimates thanks to much better than expected same-store sales. And then Shake Shack sliding on weaker than expected revenue, partially due to fewer purchases by lower income customers. That was mentioned. And then Papa John's also under pressure after missing on both the top and bottom lines. Our Kate Rogers joins us. Kate, what is the thread here that we're learning about consumer spending, particularly in the restaurant sector, and how well it's holding up?
So, Sarah, it's been so dependent on the company, it seems, but I think the lower income consumer thread does kind of trickle through all of the names you mentioned. But one exception was Starbucks earlier this week saying they're not seeing a trade down. But then we heard from Papa John's CEO today telling us that they're poised to benefit from a trade down because they think they have the best value proposition in the pizza business for a recessionary environment. You heard from Jose Sill at Restaurant Brands International talking about not making too much of ups and downs in the near term, and adding that they are seeing some trade down as well and could also benefit from that into fast food from QSR, which tends to be a little bit more expensive. So I think broadly what we're going to continue to see is a lot of strategic price hikes, restaurants kind of testing what they can do there, and value marketing in this environment moving ahead.
Kate Rogers. Kate, thank you. Confusing picture. We're going to get more on the outlook for restaurant stocks tomorrow. We will speak exclusively with the CEO of Wingstop on the back of their numbers. Check out the travel names, Booking Holdings, one of the weaker stocks.
Yeah, well, I do want to mention, I mean, I've mentioned it earlier. I think restaurants are just such a low margin business. I don't really want to be in it. I don't want to own the business. But I think they're a tell of what the consumer is doing, especially since we've actually seen restaurant sales do pretty well because of things like DoorDash. I mean, more people are like, I'm just going to order from a restaurant, but eat it at home, you know? Personally, I have a hard time doing that. I always get soggy food or cold food or something's missing. You're paying restaurant prices for no service. It pisses me off. The food's never as good. It's you know, I don't know. I really hate ordering to-go food. But we still do sometimes because we have to with the kids. You know, like you can't go wrong ordering like a pizza or Thai food's good. You know, there's some things that just work. I think it's like when you get a full meal, it's like, ugh. But anyway. So we'll see. Remember today we've got earnings from Expedia, DoorDash, Beyond, Cloudflare, Lyft, Twilio, Callaway, AMC, and Block and Opendoor. Man, that's a lot. That's a lot of earnings that we got. So I do want to take a peek now and see if we're getting any kind of institutional selling pressure towards the end of the day. Usually we do. We usually see volumes tick up at the end of the day, and then we start seeing pressure, and then things go down. Oh boy, I really got to finish setting this thing up. Anyway, so here's a QQQ, kind of trying to like melt up today, but I like it. I mean, it's far away from our lines over here. That is the 318 line. It's far away from that. End phase is just killing it, absolutely killing it. Kind of flat going into the close. Matterport went negative. I think this is because there was an update again with the iPhone. Apple's been talking about getting into 3D home scanning for a while. I'll tell you, I've used a lot of the other 3D home scanning things on the iPhone, and they suck. Like even the Matterport Axis thingy, gimbal thingy or whatever for the iPhone, it ain't good. Much prefer the Matterport Pro 2 or the like the Insta 360s and that. Those are great. Okay, so what do we got here? Coin's still bleeding out. I mean, this was a pure example of momentum. Someone here writes, I've been to an AMC 3 times the past couple months, and it's usually always in the afternoon, always packed. That's great. Yeah. I mean, that's wonderful. I love the summer season. You know, that's another thing to keep in mind too, is summer season. So younger people are out of school or college. Movie theater is still a wonderful place to go, but we're never going to, well, I shouldn't say never, but we're not getting back to pre-pandemic levels anytime soon. Remember, Cloudflare reports after the bell, and CrowdStrike is actually falling right now. I'm actually personally very intrigued by CrowdStrike. I really like CrowdStrike. Oh, here we go. Here comes that HKD. What did I say? This is like going to be very, very dangerous. And oh my God. I guess yesterday it just lost it because it was, 2 days ago was Tuesday. That's when I started streaming, and this thing was going to the moon. And I'm like, this is ridiculous. Like, it's going to momentum die out. And from then, it's already down over 50%. And I'm not trying to take credit for, like, making it fall. I'm just saying, all you have to do is look at this, folks. This is the second lesson today. Following Coinbase, it's the second lesson. If you haven't learned your lesson on momentum stocks, you got to look at the volume charts. Look, high volume. Yeah, it's going up. Volume higher. Yeah, volume high. As soon as the volume stops, you better have a stop loss so that you instantly dump when that thing starts falling. That's what you got to do. You know, you don't want to be holding the bag on these things. These like this run up for this HKD thing is so stupid. It's going to drop another, probably honestly, 70%, 50 to 70% more to go. If I had any tendies left in this, I'd be like, bye. And honestly, even if I were upside down, I'd be like, bye. But, you know, then again, Revlon, what's Revlon doing? They went to like $10, dude. That was nuts. Oh, so of course. Okay, yeah. See, look at this. Revlon, I'm like, this is so stupid. It's a momentum stock right here. This is what I was saying. It's like, it's in bankruptcy. This is not Hertz 2.0. Like, Revlon sucks. You know, I know the judge said, hey, they can pull another bond for $1 billion or whatever. You're throwing good money after bad. And so here's another stock where you get these waves of momentum, and it's terrible. Here's another wave of momentum. It's very, very dangerous. When you wake up and you see those kind of returns, you better start taking some tendies. That's all I'm going to say. Doesn't Matterport have a lot of commercial business, though, geared towards a much different audience than what Apple's trying to do? Yeah, probably. You know, I think the Apple version is going to be very, consumer, like, haha, look, it's my room or whatever. Like, Matterport is money in the future, and it's still improving. It's still getting there with its integrations with AutoCAD. I still haven't been able to figure out how to get it from Matterport to AutoCAD, but like some YouTube videos have figured it out. But once architects start using this, it's really wonderful. Like, what I used to do is I used to scan places and just get the 2D floor plan from my architect. The architect would measure one wall and then use that one wall to scale up my entire 2D plan. And boom, he had he told me he saved about 10 hours on every job I gave him a 2D floor plan of. And I'm like, that's money, you know, that's money. Like, Matterport is a great company. What they're going to do with this data is I mean, who knows what they're going to do with data. I think there are going to be great opportunities to sell it or license it. You know, Matterport is going to be something that's going to be a huge part of the business that I'm launching. Hopefully this month. Everything, attorneys are so freaking slow. But the Series A, yeah, Matterport's going to be have a play in it. So which will be really, really cool. But also a longer term play in it. Because what we're going to do with it is going to take quite a while to build out. Anyway, we got 2 minutes to go before the end of the before we get to earnings, actually. Thoughts on MGM? Yeah, I'm not too terribly opposed to the hotel businesses. I do think they are lower margin as well. So it's not, you know, it's not something I'm opposed to. And, you know, meh. It's not something I like. Would I hold it in a diversified portfolio? Yeah, I wouldn't think twice about it. But to really give a more educated answer, I would have to, you know, just do a little bit more fundamental research on it. It's not one that I'm generally very excited about. But again, maybe I'm missing something. Yeah, hey, if you've got a bomb resume, send it over to kevin@meetkevin.com, because, you know, depending on how our launch goes, our company launch, we're going to have to hire a lot of people. So at least if you have it in the email, we'll be able to go back and kind of, you know, once we do have openings, hit people up. Matterport seems like an auto buy for landlords. It should be. Thanks, Will. Appreciate it. Watch Tech Disruptors podcast with Matterport CEO. Company is doing so much right now. I'll have to check that out. You know, the Matterport CEO came on our channel as well, and I love him. But yeah, if there's some updated information, I'm happy to check that out. Okay, so look, we are now coming up on earnings. So we are about 2 minutes out. So let's get some 2-minute out music going. Here we go. All right, folks. Actually, we're less than 2 minutes out now. What do we got? 30 seconds to go. The earnings that we got, folks. We've got Expedia, DoorDash, Beyond Me, Cloudflare, Lyft, Twilio, Callaway, AMC, Block, Open Door. All coming out soon. Closing bell. Also coming up now.
Are perking up today as bonds rally and the dollar sells off. NASDAQ is the only one of the big four that is going to go out with a gain of 0.4%. We're still holding the gains for the week, though, into a Jobs Friday. That's us for Closing Bell. See you tomorrow. Now into overtime with Scott Wapner.
There it is, down 0.25% on the Dow, 0.07% on the S&P 500, 0.08% actually down. NASDAQ green up 0.41. Russell 2000 down 0.27, small caps. You've got, wow, 10-year Treasury falls to 2.661. Oil down to $88. Let's go. That should really, really push down CPI here. Lowest level since before the Ukraine invasion. Brent at 94, 93.90, basically 94. That's good. That's a nice drop right there in oil. I really like that. All right, folks. Now we have earnings. All right, let's see which one's first. Ooh, I'm kind of excited. All right, so earnings for today. Let's see, none of them have come through yet. AMC, I think, was 15 minutes after. Callaway, waiting on Twilio, Lyft. I've got these ready to go. Cloudflare, DoorDash, Expedia. Okay, Expedia comes in. Let's see what we got for Expedia. Expedia brings in revenue of 3.18. It's a beat. Not a surprise with this summer season. Oh, that adjusted EPS looks nice. 1.96 versus an estimate of 1.53. That's a big beat right there. Gross bookings didn't beat much. A little bit of a beat there. 26.14 billion versus 26.07 estimated. You do have Q2 revenue coming in at 3.18 billion versus an estimate of 2.99. That's about a 3% beat, but that bottom line beats by somewhere around 30%, folks. So really, really nice. I want to take a peek and see what's happening to that Expedia stock. But I will say that's a pretty good beat. You got to hand it to them. Even though I don't like Expedia, that's a pretty good beat. Yeah, there you go. Going up about 6% right now in the after hours on the Expedia beat. All right. DoorDash, Beyond Meat, Lyft, Twilio, Callaway, AMC, Block, and Open. Still waiting. We get some times for these. Square comes in at 410, AMC 415, Twilio 405, Beyond Meat 405, Cloudflare 415, Dash 415, Expedia 4, which we just saw. Oh, Zillow reports in an hour and a half or so. Open Door is going to be next, along with Rocket Mortgage. Dropbox and Corsair also reported. I guess we could take a quick peek at those. Both companies that personally I'm not the biggest fan of. If I would say, though, Corsair more so. Like, I would consider owning Corsair in the future. But first I want to see inventory plummet or inventory levels balance out. Nope, nothing yet on Dropbox. But anyway, good job Expedia there on the beat. Let's go then to Corsair. Dropbox is not out yet. Corsair Gaming, it's a miss. The estimate was 5 cents. The loss came in at 20 cents. That's terrible. Yep, as expected, sales coming in at 283.9. The estimate was 316.06. That is, they were estimating a profit of almost $5 million. They actually lost $11 million. That's a lot. Oh, looks like the stock is moving down about 4.39% on that. On that miss there. Okay, what about a forecast? Oh my gosh, it's very bad. So adjusted EBITDA was expected to be a midpoint of 120 million. The midpoint now is 57. That is a more than 50% cut to fiscal year revenue. More than 50% cut. Oh, it's so bad. That's really bad. Dropbox beats by 2 cents. Revenue comes in roughly as expected, 572.7 million. The estimate was 571. This is not a huge beat, but it is a beat. Dropbox Q2 EPS comes in at 17 cents versus 22 cents a year ago. So seeing a little bit of a decline there in earnings year over year, but you still have a beat, 38 cents versus 36 expected. Let's see how Dropbox is doing. Dropbox. Dropbox, down about 1%, 0.83%, something like that. Okay, we're at 405, so we should have some. Okay, DoorDash gets a beat, 1.61 billion versus 1.52. The adjusted EBITDA was 103 versus 55.1 expected. That's incredible. Revenue was a good beat. Wow, DoorDash, let's go. Orders, 426 mil versus 418. Great beat. Marketplace, 13.08 versus 12.72. Good job. DoorDash forecast comes in. Fiscal year anticipates consumer spending environment. Softer consumer spending environment second half. Still have a loss of 263 mil. For Q3, they're expecting 25 to 75 in adjusted EBITDA. Fiscal year, they're expecting adjusted EBITDA of 200 to 500. That's a pretty wide range. And that warning there on the consumer, not great for the second half. Beyond Meat comes in with a miss. Let me quickly just look at, what was this? DoorDash. Let's see what DoorDash is doing. DoorDash up 10% on this beat. I mean, the beat was pretty strong, other than the warning there on the consumer. Oh my gosh, Beyond Meat is terrible. Terrible. Beyond Meat sees fiscal year net revenue of a midpoint of 490 versus about four. Actually, it's like 495. Yeah, versus a midpoint previously of about 585. That's like a 20% cut to fiscal year net revenue. They're cutting 4% of their global workforce. Revenue misses. Revenue comes in at 44.8. No, that's international. Hold on. Net revenue comes in at 147. The estimate was 149. That's not that big of a miss. 102 for the U.S. International beat a little bit as well. So where's the miss there? I don't know exactly where that was, but they did miss on the total number just a little bit. But that fiscal year rev is bad. DoorDash killing it, up about 11% right now. Dropbox at 0.83 to the downside. Corsair only down about 4.46. Expedia still running about 9%. And then Beyond Meat, which I was kind of bagging on before the close, 4.4 to the downside. Okay, next up, Lyft. Lyft comes in with adjusted EBITDA way above expectations, stock up about 4%. Adjusted EBITDA comes in at 79 million versus 18 expected. Net of 44.4 in adjusted net. They were expecting a loss of 14. Their revenue comes in at a slight beat, 990.7 versus 986.7 million. And they're confident in their ability to continue navigating the times. Open Door. Adjusted EBITDA. Wow, that's a nice one. Interesting, because the adjusted, that looks like a beat, but I wonder if their revenue, no, it looks like a triple. Hold on. Open Door revenue 4.2 versus 4.19 billion. Good. That's a beat. Their adjusted EBITDA comes in at 218 versus 165 expected. More profit on those home sales, because home sales are still, like, prices are still up. Loss per share though was 9 cents. And they were expecting 2.2. So that's a little bit of a miss there. Adjusted net 122 plus versus 79.4 expected. After ditching home buying business, Zillow Group partners with Open Door. What? Zillow and Open Door announced multi-year partnership? Oh, that is going to be really entertaining. Oh, I can't wait to go. You know, we might have to do that one in the course of a live stream versus Solar Edge. Woo! Open Door down 6.8%. Give us some more discounts here. That's actually good. Okay. Waiting for Block. Okay, Block should be coming out now. I don't have the summary of it here, but let's see. It should be out in just a second. Come on, Square. Okay, waiting for the summary on that. AMC not out yet. Callaway not out yet. Twilio beats 943 million in Q2 rev. Wow, that's so good. Loss per share still 177. $322 million of loss. Ugh. Money losing companies. Stock's up about 1.7% in afters. Cloudflare, nothing yet. DoorDash reports larger loss than expected despite record food deliveries. Covered that. Yeah, Corsair was a disaster. Waiting for Square. AMC, it's a miss. It comes in with a loss of 20 cents versus the estimate of 19 cents of a loss. Sales of 1.17 beat, though, the 1.16 estimate. So, you know, I mean, this is almost a meet. You kind of just have to give it to them. That pretty much meets expectations. I really want to know about this Zillow thing because this is very interesting to me. Zillow partnership. My assumption is that Zillow is basically like, hey, we have all these leads for home sellers. Why don't we give them to you, Opendoor? And I really got to get Opendoor some competition. Oh, I will. Opendoor is going to hate me, by the way, in a couple of years' time. Anyway, Block. Okay, Block hardware revenue comes in at a beat, 48 mil versus 45.2. EPS beats by 1 penny, 18 cents versus 17 cents expected. Sales miss coming in at 3.96 versus 4.35 expected. Transaction-based revenue misses 1.48 versus 1.51. These are still pretty resilient earnings, though. I mean, like if you're looking for a sign of like, oh yeah, we're definitely in a recession, these earnings are way too resilient for that. I mean, I do think we're in a recession. Like, for me, 2 quarters of negative GDP, bro, we're in a recession. I don't really care how you define it. But this is definitely a different kind of recession than what we traditionally expect. Beyond Meat down 6% here. We see Expedia only up about 6% now. Twilio ends up going negative 1.52 despite that beat. Opendoor is only down about 3.4%. I think that Zillow partnership is going to boost them a little bit. It's going to be a fire hose of leads. I don't know if they'll be quality leads, so it's too soon to tell. Corsair continues its decline, down over 8% now. Dash kills it, up 14%. Wow. Really, really good. Still rising, by the way. Still going. Oh my gosh. Expedia up about 6%. Dude, DoorDash. Oh my gosh, it's up 15.5% right now. It's the tale of two cities. That is for sure. This is a really good question. Isn't it good news? Isn't good news technically bad news since it means the Fed has to crank up? At this point, it's a little different in my opinion from what we had at the beginning of the year. At the beginning of the year, good news was bad news. But now the Fed is of the belief that we've already propped up enough. Now let's just see if inflation actually comes down. If you believe inflation is going to come down, which I do, based on what we've had with break evens and what we're seeing in commodities and everything, I actually think good news is just good news at this point in terms of earnings, because that's what's actually creating a solid floor in the stock market. As far as the Fed continuing to hike, I don't think it's at this point comes down to earnings at companies. Although I do understand that means consumers are still spending, which gives pricing power. But we've got plenty of other indicators that inflation's heading down. So I'm bullish on inflation going down. I got made fun of a long time for being in camp transitory. I'm still in camp transitory. I haven't left it. It's just obviously it's taken a while, but it will go away. Dash has a monopoly in the making with huge total addressable market. I don't know, man. You've got good competition from Uber. There are other companies that deliver as well, Deliveroo and stuff like that. I think it's I don't know, all these Uberization models, relatively low margin. Sup, Drew? It has been a while. All right. I think we covered them all. Square down about 3% on gross payment volume miss. And otherwise we've covered them all. Cloudflare we have not yet. Cloud beats Cloudflare. Revenue of 234 mil versus 227. Fiscal year revenue gets a bump as well. Midpoint about 970 million in revenue. Estimate was for about 957, so that's a nice beat. Q3 revenue expected to be has a slight rise here, a slight beat. I mean, this is a very good set, very, very good. I would expect them to be up on this. I don't know if they'd be up much, 3-4% or something like that. Oh my God, 11%. That's great. Wow, the market was really worried about Cloudflare apparently. So great. Is Square giving guidance? I don't see that. They are. No, I don't see guidance. And somebody says Square AMC just fell. Wonder why. Because we know they beat EPS by 3 cents, but revenue missed by about 20 mil. Special dividend of AMC preferred equity units. That could have something to do with it. Wow, net's going. Let's go. Okay, let's do what am I doing? AMC. Good job, Cloudflare. Oh yeah, look at AMC fall off a cliff over here. It's some of the shares that I have. It's actually, I still hold my shares. I said I'd hold them for at least a year. I guess I just went upside down again. Oh well. I had him at Chase though, so I had a higher cost basis at Chase. All right, that about does it. Thanks so much for being here. Of course, remember live stream will be a little later today. I will send an alert for that, and we'll see you soon. Thanks.